I spent 20 years in the insurance industry, but honestly, the last 5 years at Beshak have been an eye opener. Talking to hundreds of real customers, I got to understand their struggles firsthand. Most of these struggles were based on wrong decisions or choices made early in their life. Today, I'm sharing the 5 incorrect decisions I've seen people repeatedly following when buying health insurance. Now, these aren't textbook tips, these are real life insights. So, hear me out carefully. Avoiding these mistakes can save you a lot of stress and money later on in your life. So, let's jump straight in. One, I'll be my own insurance company. Many think health insurance is so complicated. Some even feel that health insurance is a scam. So they say, I'll just build my own fund. But here's the real problem. One, your fund might not grow fast enough to cover a sudden big medical expense. Two, smaller health expenses might drain your funds slowly, leaving you exposed when you actually need substantial coverage. Three, your funds can get exhausted, but if you buy insurance right, that may never happen specifically with insurance. If you truly want to match proper health insurance, you'll need to build a fund large enough to cover lifetime of healthcare expenses. For example, to match a 10 lakh insurance coverage, you'll need 10 lakh multiplied by the number of years you will live. And that will be a huge amount. Incorrect decision number two. Now, many people choose some comfortable cover amount initially thinking they'll upgrade it later. But here's the catch. Once diseases start showing up, upgrading your cover gets really complicated. Set age 30 as your most ideal age to get an adequate cover for your old age and beyond. It's when diseases start cropping up. The positive side usually is that it is also when you're financially the strongest and healthiest in your life. To figure out your future coverage, take today's good enough cover that you feel may be comfortable enough today, add about 10% inflation per year until you hit 50 or 60 on a spreadsheet. Just let me give you an example. If you think a 5 lakh cover looks good today at the age of 30, then at 10% inflation, if you put it on a spreadsheet, it will become 30 lakhs by the age of 60. And that will be the minimum cover. Yes, that's just the minimum cover you will need to cover rising healthcare costs. Incorrect decision number three, buying based on big brands or flashy features. Now, people are confused between big brands, banks, business houses like HDFC, ICICI, Tata, and plans that offer fancy features like Niva, Bupa, Care, or an Aditya Birla. Now, big brands or fancy features may look attractive, but that's not how you make decisions with respect to a long-term product like health insurance. The really right way is as follows. First, shortlist the right policy based on your needs, ensuring minimum out of pocket for you. Then, shortlist insurers based on three critical metrics. One, percentage of claims paid within 30 days. This will tell you how fast is an insurer in settling their claims that they receive. Metric number two, percentage of complaints relative to claims. How many complaints has a insurance company received against the number of claims it has received and settled? This specific complaint ratio helps you understand how dissatisfied or satisfied customers are. Number three, incurred claim ratio. Incurred claim ratio is a ratio which tells you what is the amount of claim that an insurance company has paid compared to the premium that it collected in a particular year. Now, this ratio basically should be in between 60 and 80% over a period of time, over a year maybe, right? It tells you basically whether an insurer is good at settling claims, has settled enough claims against the premium that it collected. It also tells you that the company is making enough profits to be viable in the long run and does not increase premiums frequently. I know these ratios can be very complicated to understand. You can find these metrics on the insurer's website under public disclosures, usually in the footer of the insurer's website, or you want it to be even simpler, you can come on beshak.org and check our decoder and you will find all these metrics there. Now, wrong decision number 4, not taking the proposal form seriously. Now, many treat the proposal form like just another bank form, bank account form, or an FD formality, which is totally wrong. Insurers give you a policy based on the information you provide them in the proposal form. Proposal form is the most significant basis on which an insurance policy is issued to you. If the proposal form is wrong, then the policy will also be wrong. Basically, your future claims completely depend on this form. Even the best policy from the best insurer can get rejected if your form has errors, and this can happen even after 10 years, even if you are going to apply moratorium, because insurers can claim that you've made a fraud in your policy. Wrong decision number 5, chasing premium discounts by buying insurance directly. Now, buying insurance directly might save you a few bucks, but when claims get complicated, you are stuck dealing with toll-free numbers and call centers. Remember, when you buy from a call center, you deal with a call center during claims. Very important to understand that insurers see claims as losses, so they are not going to be on your side at the time of claims. You need an expert who knows the game, speaks the insurer's language, and fights for you behind the scene to ensure you get what you deserve. Having someone trustworthy by your side can make a huge difference when things get tough. That's it. Avoid these 5 mistakes and you will thank yourself later for making the right decisions early. If you have any questions, please comment below and we will be happy to answer them in the comments. Thank you.